We are here with the newest junior auditor of Cartman, Griffin and Simpson LLP, and we are going to learn a little bit about what he does. So tell us, what exactly does an auditor do?
First of all, thank you for having me here. The purpose of an auditor is to take information that is prepared by somebody else, such as a company's financial statements, and investigate them to ensure that they are mistake-free and fairly stated. Us auditors play a very important role in society because we make sure that no company is giving out any misleading information. And this can be very useful for investors and lenders because it helps them decide if they want to purchase a stock or lend money to a business. They can always count on us delivering truthful and honest information.
That's very interesting. But a lot of people do mix up auditors with accountants. Could you briefly explain what's the difference between those two?
Of course, one difference is an accountant is they usually work for they usually do the work for the company that they work for. However, for auditors, they are hired from outside firms to double check the accuracy of the work done by the accountant. Another difference is accountants do their work on a daily basis, but for auditors, they commonly do their work quarterly or annually. And lastly, they have their different standards to follow. The accountants follow obviously the accounting standards, and auditors follow their own auditing standards.
That actually makes a lot of sense. Could you list the difference between auditors and elaborate on the type of auditing you will be doing?
There are many types of auditors. One is called internal audit, and that is when you have someone in your business conduct your auditing. And then there's external, which is the complete opposite of internal. So you hire someone from an outside company to do your auditing. And then one's also called an IRS tax audit, and as you guessed, that auditor mainly focuses on the company's filed tax returns, ensure that the company does not overpay or underpay any taxes. And fourth one is an operational audit. This audit is similar to internal audits. However, the goal of the operating audit is to focus on your company's operations and ways to improve them. And lastly, the last type of audit, and the one that I will be doing in my new role as a financial audit, is called a financial audit. This type of audit is the most common and is usually external. What they do is measure the fairness and accuracy of a company's financial statements, and after the audit reviews the transaction procedures and balances to create an audit report. The report is then released to lenders, creditors, and investors to help them make important business decisions.
That is very neat. Now, one last question. Could you explain the significance of professional judgment and skepticism and its importance to auditors?
Absolutely. So professional judgment is to apply your own knowledge, skills, and experience to develop professional standards, which will help you serve your clients. It is important in auditing because we have many clients, and we want them to view us as model workers, and that every audit report is at a professional level, which will cause them to hire us or even recommend us to other companies. Professional skepticism is the ability to have a questioning mind and being alert to mistakes that may be from error or fraud, and paying attention to any red flags that stand out. It is extremely important to auditors because you cannot trust anyone at every firm. I'm not saying to disbelieve everything you see, but to always have confirmed evidence on anything that may seem suspicious or inconsistent that you come across. It's important because it will cause accountants not to be dishonest in their financial statements, and if you come across any mistake, you'll be able to detect it.
Thank you very much for taking your time today to explain your new role as an auditor of Cartman, Griffin and Simpson LLP. I'm sure your family will now understand exactly what you do.
Thank you.